Guys, so this is just me trying to show how I do my daily analysis. Yeah, so normally I start for the day, okay, but I've already done it. Then I had this idea of okay, should I just make a video on how I analyze my daily bias? So this is how I do it. I first of all I come to the daily time frame and I want to see what the market is has been doing. So I see that we've clearly been going down and we've been taking out liquidity as we're going. We took out liquidity from here, we took out from here, taking out from here, and here is our next target. Yeah. So, but still, it doesn't mean we're gonna get there like ASAP. You get so we have to now check. Okay, so that's our long-term objective, getting there. I'm basically a day trader, so I trade just that day and I get my results. So I don't see myself getting, I don't see price getting here today. I really don't see that happening. And we have this little swing low here we need to conquer. So on this place, price has already traded to our fair value gap. I really do not see price getting there again. Nobody's saying it can't go and close it up fully, but I just don't see that happening because I actually want to see a quick movement away from here because if you see here was actually 50% from the swing high to the swing low. Here was 50%. For completeness, I'm just going to show you that. So, yeah, that's basically 50%. So price got to 50% equilibrium and a little bit into premium and sold off. But I wanted to see like quick reaction. This was not bad. Then this yesterday, I was expecting another market, another bearish move, taking out this low. But let's see what the gets has for us. But that's that. I'm just showing you what my bias is. So I really do not see price coming back down here, coming to close up here. Nobody's saying it can't do that, but I just don't see that happening. So I want to go into the market and look for a selling opportunity to beat this previous low and take out this low at once. Today, I'm trying this for the first time, so I don't know if it's going to show. But there is news. If it shows, fine. There is news at 7 o'clock. High impact news at 7 o'clock New York time on the GBP. Then 8:30 New York time on the USD. So and they are both high impact news. So it's what I'm thinking that the market is going to use as a driver to take out the previous day's low and as well this low here, this sell side there. So now we'll go to the 1 hour time frame and continue our analysis. So here, this is where I got the idea. I was like, okay, should we try? So should we try and like record this video right here? So I want to move this. These are my daily deviations. So I always put them to just keep me in check and just be aware of the time and like to be aware time sensitive you get. So yeah. So let me explain it. This is the New York opening time. I'm sorry, New York midnight. So this is New York midnight. Then 4 o'clock is usually it's because it's on a 1 hourly chart. It's in a 1 hour chart, sorry. Um it's showing 4 o'clock, but it's usually 4:30. 4:30, I'm usually coming into the market to see what's happening. 7 o'clock is when I'm willing to take trades. Okay, so 4:30, I'm coming into the market. See, I could take if I see a very good setup on the 4:30, 4:30 down to seven before 7 o'clock. I could take a trade, but it has to be high quality. It has to be a very good setup. Whereas when I want to come and do my analysis and just wait down till 7 o'clock when I'm ready to enter, so that's why you have 7 o'clock here. Then 12 o'clock, I'm out of the markets. So that's what I do. Also, whenever I come, this is the first things I do whenever I come to the 1 hour. I delineate the timing. Then I take this. That's my OP means opening price. And I noticed something. Yesterday, the opening price was actually a doji. I don't know if that means anything, but yeah. I don't know if that means anything actually, whatever though. So, wasn't that? I think I'm so sure of that. Yeah, see it here. Here's today's price. Today's price. This is opening price is a doji as well. Whatever. So, so 5, 8, 5, 6. Yeah. So yeah, here we have our opening price. Usually, I really do not. ICT takes a big deal out of it and all, and I know it's all that important. I just use it to observe what price is doing. I will use it sometimes, but sometimes I might not really have to necessarily want to use it. But most of the time, I just keep it there for awareness sake. Yeah, it still has a lot of significance though, but it's not. ICT's principle is if we are going to be bearish, we want to see price trade above the opening price, then later come down and starts trading lower. It doesn't always happen. It happens most of the time, but it really doesn't always happen. So until I find out maybe other ideologies towards how I can use it, I'm just using it for awareness sake. And days like this now that bearish. So if I see price come below and trade, then yeah, maybe I will have that confidence. But I could still enter even before the trade gets to opening price if I see a clear setup because my bias is bearish. It doesn't mean I'm going to sleep on my bias being bearish, but I most likely will not take a trade if price was to go higher, except I see something highly convincing that this market wants to go higher. But I'm super bearish on today's market. So yeah, this is expected. This move up because of yesterday was the I think was it the interest rate or was the rates? It's about rates, so it definitely should be the interest rates. And this I don't really care about about when it comes to news. I don't care about the numbers. Okay, I strongly believe that the price is going to push to where liquidity is, regardless of the results. There are days that the stuff is going to be good for the currency, but it still goes wherever it wants to go to anyway. So it makes sense to know that I really shouldn't give a fuck about the numbers. So that being said, what was I saying? So now I've set how I want to see the market, you understand, for today. Now this here, it's an imbalance from yesterday's news, like I was saying. So we're expecting price to move to it. And if we check from there, from here, because the move, I wouldn't use here. I'll just take it here. Here is more reasonable for the price because that's just this directly like the news immediately, instant impact. So from here was when the volume has been the consolidation. You understand before the movements. So from here down to here, price has traded to equilibrium, traded to premium. Now it could be selling, but I want to see confirmation. So what I'm going to do is check if there's any other stuff I want to be looking out for. Hmm. If I don't really see anything, just this big, huge imbalance. So I'll just go to the 15 minutes. I'll continue there. I'd like to see something deeper, honestly. So what I'm seeing in the 15 minutes, and I think it was there in the 1 hour too, is this fair value gap. So I'll go back to the 1 hour. Now it's quite bigger on the 1 hour and it's direct. I really do not like when it closes and just immediately fills. Doesn't mean it don't work, but since this is what I'm saying, I'm gonna use 15 minutes. I'm gonna map out, draw this fair value gap. Then I'll see how it frames out on the. I'll still go back to the 1 hour to see how it fits. Okay, so I want to see how price reacts on this fair value gap. I want to see how price reacts. This is a very bigger one when it comes to the 1 hour. So if price trades past this without going back further to complete this imbalance. If price trades back deeper, then now I would increase the gap down to the 1 hour time frame. I'm going to then increase it. I want to see what price is reacting to. Okay, so I'm not rushing up anything yet. That's why I told you this time is just for analysis from my 4 o'clock down to 7 for analysis. I only take a setup if it is clear and good. There's no setup right now, safe anyways. So there is another gap here, there is another gap, and here is an order block. This is the order block that makes it. So we want to see how price reacts to these levels. Then we will know, okay, this is the direction we want to be taking in the market. I want to see that price. What I want to see, what's me personally, what I want to see is price trade into this fair value gap for, I don't know how far it's gonna go. We shouldn't go too deep anyways. Maybe, maybe. Let me tell you what I want to see, then I'll tell you the maybe parts. So price trades down into this fair value gap and goes back up here, then make some sort of reversal and start going down. That's what I want to see. Then the maybe part now is what we could still see again is price trade from here. Let's see, from here to here and trade to equilibrium. That is, equilibrium is it filling up this 1 hour fair value gap. But what I like to do when I see this type of, how I like to set um my Fibonacci to get the best is I have to look at here. If here now, okay, it means for me, for my own bias, I'm correct with the way I drew mine. Everybody has the way they draw theirs, but this is how I draw mine. This move and this move, this there's a retracement here. Whenever I place it, if it makes a 50% retracement, I'll use the swing to trade to put it here. But if it doesn't make that 50% retracement, then I can use from here down up here. I don't know if you understand. If price, if this swing high retraces and gets to 50% when I drag this low down here and I get a 50% retracement, it means that I would, let's assume that for some reason this is, it makes a 50% retracement. It means that when I want to test my measurements, I'm going to start from here because I'll believe that that move has already been completed. So there is no need to use from here to here again. But because of price doesn't make a 50% retracement, at least a 50% retracement, 50% or lesser, but it doesn't make at least a 50% retracement, then I can use it to here. This is how I've been practicing with it since. So doesn't mean that it's 100% correct. Everybody, the one good thing about trading is practice on what works for you and just keep doing it, keep doing it. Even the days you fail, keep doing it because maybe the days failing is the days favoring someone else to get. So just keep doing it. So this is what I want to see. Price gets to 50% retracement or close, moves higher. I'm not trading, so it doesn't have to be precise because I'm not even interested in taking the trade here. So either it gets to 50% retraces or even close, it could get here. It does that most of the time. Most even periods and I hate it the most when it does that. Even when I'm interested in taking the trade, it doesn't even get you. Just for some reason gives you every other perfect scenario. But the fact that it doesn't get to 50%, I really do not want to get tempted because sometimes it could just go up and then take you out and because of you rushed in early. So I like 50% at least. If I see 50% and every other thing aligns, I could take the trade. But most sincerely, I love to buy at a discount and sell at a premium. If I get the chance, that's like an A plus setup for me. When I get a discount, I consider discount as from my 618 level, 705 level, or 79 level. That's where I consider discounts. Here, it's still discount anyways. Depends on what I'm seeing in the market. Maybe I'm seeing another block that I'm very confident in. But you see, in this particular situation, if I never wanted to take or a buy, I'll be very, very scared because now it has taken out the other block here. There are others here, but this is where I do not expect price to take care out except it's going for a turtle soup. And if it's going for a turtle soup, then we expect a very fast reaction away from this level. So that's stuff to consider. So back to business. So this is what I'm expecting to see. Then when price gets here, it trades higher here, and I look for a reason to short it down to the previous day's low. Yeah. So let's see how it goes. We have already traded into the fair value gap. Do not be sorry, do not be like, don't think it must get to 50%. I'm saying this is what I'm expecting to see. But trading into the fair value gap is good enough. Like remember, I said 15 minutes fair value gap. If then we see it go deeper, we'll move it down to 1 hour. But this is the first objective. 50%, 15 minutes fair value gap. Trade into it, then move higher to an order block from the 1 hour. The other block I'm using is the bearish order block I'm going to be using is the 1 hour bearish order block because it's more sound and solid. And as we go, we see how price reacts and we know the block to use. They are like three blocks, but I won't be really counting this that much because of the long weak and small body. I like bigger body, lesser weak. So yeah. So we'll see how that goes. Yeah, I don't know if I should wait it out. It's gonna take a while. Or I'm just gonna update with what happens later on. But this for now. Yeah, hi guys. So I'm back again, and I I had a lot of things going on yesterday, so I couldn't come back to do this video and show you the trades that I took and how the whole setup I aligned went yesterday. So I'll just be doing that right now. So yeah, as you can see, we met the objective. Yeah, I don't think I traded down to this objective, but I was able to capture something. So yeah, let's go to see what actually happened. So let's start with 1 hour. Yeah, so remember on the 1 hour, uh, I was saying that we would want to see price trade here, go higher, then look for something settle. But that didn't actually happen. It doesn't mean I can't take a setup. So when you're trading and you see, okay, you know that my general bias was bearish. So I didn't want to be a buyer in this market, no matter what. That's when I have a bias, I have to see something strong or convincing, like I said, that will make me want to be a buyer. That's if I am wanting to sell, that's if I'm bearish. I have to see something strong or convincing to make me change my mind to say, okay, I want to buy. Sometimes I could see and I'm not convinced. I'm just gonna leave it. So that's why you don't trade every day. So that's why if you're not no setup to buy, okay, no problem. I'm not trading that day. I'm going to go to the sideline and watch and learn and observe what happened. So seeing that the price doesn't want to trade back up into here, and remind you that's to remind you we have gotten to 50% from this month down to a premium. So price does not need, and it has done like that's gone to the middle of the CB. So that's um consequent encroachment. So price doesn't really need to get up the way. So when you see that price is not willing to go higher, you have to stick to your buyers. That's being a seller, which was the initial stuff. So I'll show you what made me to become a seller in this market, what I saw to make me say, okay, yeah, I don't think price is going to go back up here now because they want to push price lower. Remember the liquidity point I showed you that we were targeting. We've gotten there already. There's in hindsight, but I told you beforehand that that's where we are going. Yeah. So let me show you what I saw 15 minutes before going down to the 1 minute straight up, not to waste our time. Yeah. So 15 minutes. Um, Where are we at? So now this news driver, this is 7 o'clock. There was a GBP news driver by 7 o'clock. What I was hoping to see was this news driver, them using it to take out liquidity, this liquidity, and then trade, like close up this gap just a little bit more. or fully, whatever. But I don't expect it fully, but I expect at least a little bit more because we are working with time. We have to get to that place, that liquidity void, that sell side liquidity on the daily charts. So when I see that on the 15 minutes, that price doesn't, in fact, they use the driver to take it down lower and convince some buyers that this other block will hold, and it doesn't hold. It instead creates another fair value gap that was traded into. Then I was sure that, yeah, bro, you gotta be a seller in this market. Now let's go to the 1 hour, sorry, the 1 minute, and I'll show you how I sold the market. So the 1 minute time frame, yeah. Let's see. So yeah, we're on the 1 minute time frame. And what did I see? Haha, I see. What did I see? So yeah, so we are here, and I will just bring out my tree. I had to hide them. So, sorry about that. So here I have seen this fair value gap. But what I've seen here is this is the news driver of the 7 o'clock, right? Then price trades to this former 1 hour fair value gap, which is going to what? Act as support now. This is perfect, like perfect. So price trades into the 1 hour fair value gap, reject, shifts in market structure now, trades back, shifted again. This is my confirmation. Creates a fair value gap, right? Now goes and take out liquidity here, but watch, it doesn't take out this guy, doesn't take out these two bad boys. Now, when he finally trades down, taking out this, shifting this liquidity again, this sell side, sorry, this market structure, shifting it out, displacement creates a fair value gap. I knew that yes, we are in business right now. So when price created this fair value gap, what I just had to do was create those. I think it was in the object tree, but let me just use it's now. I already pressed it out. I took it out. I took this stuff here. I took the fib from here to here and drew out 50%. I told you, like I told you earlier, I want to be buying either at a discount or at 50%. I really love discounts. Yeah, because of its hindsight, I wish I bought here. Because of I was like, yeah, you could have just stick to your stuff and buy a discount. But it's always okay as long as my one of my rules is okay. It's in a fair value gap. If this fair value gap was on the 15th or was on the discount price, or on the, sorry, on the premium price, that's 618 level. Bet me, I'm buying there. I'm buying at the 618 level. But because of the fair value gap wasn't there, and I was looking at this guy, I was like, okay, let me just buy here. So then I bought. Oh, sorry. So I bought. Yeah, that is a different trade. Oh, my bad. Sorry, those are different trades. So I sold there, man. I have to get used to using all this, like talking and trying to explain everything on the video. Sometimes it's overwhelming and I'm just starting it out. So please bear with me. Just get the message. That's the most important thing. Get the message, get the idea. This is not that hard to get. Just have to get the idea and understand that you can do this. So let me tell you why I bought, why I put my stop loss and all. And another thing you're not noticing is this is a breaker because price has taken out here, traded to here. So I was looking like, okay, because of this breaker, I do not want to be aggressive and buy. I want to see price trade to 50% and still trade to equilibrium, that's 50%, and still trade into this fair value gap. Then I can sell. You understand? So once price has taken out this guy, and this is what 10%, 10 fucking percent. We didn't even get to price got to our liquidity our social liquidity that we were aiming for. But I didn't hold on to that moment because of the timing. Remember time. I like to be out at 12 o'clock. Okay, so I was following price up and I was like, okay, 10% if we can hit it, I'm good because it was almost get there over. But we'll get there. Let me just show you what the ideology is towards this trade. So this is the breaker. So price gets I was confident that this would hold. Then my stop loss, why my stop loss was here was I was looking at this candle here, this whole place here. I was not expecting price to trade it's a block. It's not a rejection. I've forgotten the name of that stuff. You understand? I was not expecting price to trade above this level. So that's why my stop was there. That's 7 pip stop loss. Okay, so then price started to trade lower, started trading lower, started trading lower. I was still in. I was not seeing anything that was going to make me change my mind on being bearish because I knew where we were driving for. The main thing is you have to know where price is moving. When you know where price is moving, every other thing inside your trade is noise. As long as you get in a good position, every other thing is noise. It's not that you see something that maybe is very, very convincing, but literally it can't be on the 1 minute again. It has to be on a higher time frame. And I wasn't seeing anything. It was just aggressive, pushing lower, aggressive. So every other thing is nice when you see what you want. The main thing is you have to look at why I like this is because why it's good to have a bias is you look at the 1 minute time and the daily time frame. Price moves in a day, price moves somewhere. So you want to be in the majority of that move. Okay? You don't need to get it all. You understand? But this is good. Come on. This can't get any. If not for if I was gonna, I don't think was stopping me to hold this though. I just wanted to, mostly because of the fact that I already said in the other video that one at 12 o'clock I'm out, but I want to correct that. When I say 12 o'clock I'm out, doesn't mean I'm out of the trade. You get? It means that I am not looking for any setup anymore. If to get to 12 o'clock and I don't see a setup, fine. But it doesn't mean that after 12 o'clock I cannot hold a position if I have an objective. But the fact is I've gotten 10% already. Man, I deserve that fucking break. Maybe I don't really believe in a mental saying I deserve a break. You understand? Except the only time I want to take a break is if I want to do some recovery, like maybe I'm burnt out or stuff. But mentally saying I deserve it, no, 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 I'm not entitled to that. I love to work my ass off on whatever I do. So, but like, I was just like, man, 10 is not bad. Like, this is a very good day you get. So that is that. So the main thing I want you to understand is have a bias, learn. Okay, firstly learn, then have a bias, follow through your bias. That's how you do it. And when you don't see your bias coming to fruition, that's if you start seeing higher movements, just accept like it has to be so I don't even know how to but it has to be really, really something so good that it's not FOMO. Make sure it's not FOMO, like you're not fearing to miss out on that. It has to be really good, like okay, yeah, yeah, you're convinced. And it doesn't have to be that day, maybe it's the next day. You're still supposed to be bearish, but maybe the next day you're still seeing higher movement, and then maybe so it has to be something strong to make you know that okay, you're shifting bias. Okay, it has to be technical. Let's put it that way. It has to be technical for you to shift bias. So that's how we cut a good 10%. That's 70 pips. Well, I hope this gives you insight on whatever it is you're trying to learn. Or I hope you learned a few things from this. Until next time, good luck and good trading.